Let's get this on Facebook real quick. All right, cool. Looks like we're good to go. Let me see. Get everything going on here real quick. I posted the link too. All right, cool. So it looks like, let me post the link for everyone. Share this. Let me give it a few more minutes for people to hop in. We're about 5 minutes early, so we have some time. But if you guys have any questions, feel free to put them in the chat and we can look at any pair or any strategy you guys want to cover. Otherwise, I'm probably just going to scan the charts just so we can see if there's any last minute entries, because it is Thursday, so the market's going to be closing soon tomorrow. So volatility is probably going to die down tonight. So we'll see if there's anything available. But if not, I mean, it's fine. We'll just see if there's anything that we can prep for probably next week. Let me get this on the Facebook real quick. There's the link right there. All right, cool. Looks like we're good to go, guys. So it looks like it is up on our. So let me get on the Facebook real quick just so other people can join that aren't in the Telegram groups. All right, perfect. Looks like we're good to go, guys. So if any of you guys have any questions, feel free to put them in the chat. And then we can look over, pretty much anything that you guys want us to cover. Otherwise, we're just going to go down the list and see what's good. Hey, Deswell, how's it going? We got Deswell in here. Let's see. We got a few other people in here too. So if you guys are in the Zoom, you guys can put the questions in the Q&A. But if you guys are in the YouTube, just put them in the chat, and then I can go over pretty much any questions you guys have. But yeah, just another day. Trading. I mean, today was okay. I mean, it was good for the most part, it looks like. So we have this active odd CAD position, and it hit TP1 down here, but it hit TP1 during the spread. So since it was during the spread, I didn't exit because the spread was like, it was like 17 pips. So there's like no point in me exiting the trade because although I was in profit, slight profit, it wasn't that much. So this looks fine for now. Let's see if there's any new zones that have been created. No, it looks fine. And for you guys that are new here, if you guys aren't familiar with the zones that I just mentioned, basically there's zones that are plotted with the K2SR indicator. And what they do is they provide the strongest and closest rejection points. So I'll just show you guys how I do it normally. So this is what, for the new people here, this is what a normal chart looks like. It's naked, there's nothing there. And it's kind of hard to see, where price is likely to reject from. So if it looks like this, then we, once we see this on the chart, we turn on the K2 SR version 2, and then you can see the zones on the chart now. So basically what I do is I draw rectangles over these zones so that I could have a good understanding as to, where not to trade. Because if you trade where the zones are, odds are price is probably going to reject off it and reverse on you, or it'll break through it and continue on, which, it could go both ways. So it just depends on, you want to make sure that you're on the right side of the trade. But this is pretty much how I mark up the charts before I, look for any entries. And then I turn off the K² SR indicator, and there you go. You can see a huge difference. So, this is how it looks now. We have all these rejection points. Like, we know that this is a strong zone right here where it keeps rejecting from. This is a higher zone up here. And then this is the lower zone right here. So this is why we took this position, because price broke this zone right here. And then I turned on the K² momentum indicator to see where momentum's moving. And clearly it's moving down from right here. So if you took a sell right here when this momentum candle closed, you could have literally rode this down from this point all the way down here. I think that's what Shawn did. I know he took this trade way earlier. So if you took this from the top, or not even the top, this is like, if you took it from the top, obviously you'd make more. But if you came down here where it was confirmed, you could have locked in like 134 pips since the 22nd. So like a day and a half, I guess, or maybe 2 days. So it's a pretty nice move right there. We actually caught 2 of these moves. So for our first entry, we actually caught, so I missed this actual move right here. I think I didn't take it, but because it was too close to the zone. Like I mentioned earlier, generally what happens when price gets near these zones is it'll probably either reject off it or it'll continue down. Pretty much like what happened here. Like price came up, rejected off this zone, and came all the way down. But there could have been another scenario where price could have broke through it and continued up. Say if price, closed above here. And that's why I took this trade down here, because I was waiting for confirmation. Even though I knew that price was going to come down from right here, it was only about a 14 pip move. So, if you come in, you got to take the spread for 3 pips. So you technically would come in at a loss of 3 pips. And then when you exit, you'd have to get out for another 3 pips. So I technically only would have locked in, less than 10 pips. So it's a little risky. And that's why I waited for it to come down here. And once price closed below this zone, that's where we took the sell right here. And if you guys are in I share this with the free chat too. So if you guys are in the free group, I did share with you guys. It was shared in the premium first, obviously, but you can see right here that, here, let me see, we just got a lot of stuff on here. Let's type this up. So like this was actually, no, this was the last one. So this was the position I called, what was it, yesterday? Same exact position. So you can see right here how this lines up over here on the chart. This is the same exact position that I called right here. Same exact one. So what we did is we took this, and then it finally hit full TP down here for a gain of 16 pips, 33 pips. For a gain of 33 pips, which is actually pretty good, for this move right here. And I pretty much timed it to exit right here, because like I mentioned before, it's the same strategy back and forth. Like literally the strategy works like clockwork. So like I mentioned, we know when price reaches this point, there's one of 2 things that can happen. It can either reject back up or it can break through it and continue below. So what happened here is we hit our full TP, and then as soon as it closed again below, what do we do? Same exact thing. We entered for another sell. And then now we are in profit. So, same thing right here. I'm just waiting for it to drop down further so we could go back into profit. But when this happens right here, what I try to do after that is I try to determine where the next zone is, because like I mentioned, price moves from zone to zone. So we have to know where the bottom zone is so that we can make sure that we exit before price reaches that point. So let's just turn on the SR indicators. And if there's no zones like on this specific time frame, what I do is I just go on the higher time frame. So if there's nothing there, I go on the 8-hour. And if there's nothing there on the 8-hour, I go on the daily. And there you go. See, so we have this zone right here. It's only one line. So what I'm going to do is, instead of drawing a full-on zone, I'll just draw a line there so that I can see where it's likely to reject from. So, once I have that, I just hide this, and then I pull it up on the normal 4-hour chart. And just looking at it from here, we have a ways to go before it reaches that zone. So as you can see right here, our TP2 right here for 25 pips is in this part right here. So we can move our stop loss to TP2 right here as soon as price reaches this area. So when price reaches this area, we can move our stop loss to TP2 so that if price, like I mentioned earlier, when price gets to these zone points, it can either reject off it and shoot back up, or it can break below. So once we move our stop loss and profit right here to TP2, then we can guarantee 25 pips. And then if it rejects up, we get stop down and profit at 25 pips. However, if it breaks below, we get full profit here at 50 pips. So it's a win-win for you. Once you move your stop loss and profit, it's a risk-free trade. So you don't have to stress over, worrying if the trade's going to go your way or not, because you're going to win regardless. So, this is how the K2 strategies work, and we keep it simple. A lot of people like to overcomplicate trading, but in reality, it's better to just keep it simple. James said this works on any time frame. Yeah, so this works on all time frames, but I recommend doing it on the 4-hour time frame and up, because so I'll show you an example here. So you can see right here that price respects these zones very nicely. You can see if I even zoom out pretty far out, you can see price comes up and it tests the zone, shoots up to the next zone, comes back down, rejects, comes back up, consolidates within the zone. And then once it breaks outside of the zone, it continues up to the next zone, rejects, comes back down, tests the same exact zone. And it literally just bounces from zone to zone. And I find the 4-hour chart to be very accurate because it cuts out all the noise. But if you go on a shorter time frame, like say the 30-minute, you can see here that it still respects the zones, but it's not as like it's better if you're scalping, because you can see right here. So price comes up, rejects off here, consolidates within the zone. And what we'd expect is for price to come from this zone to this zone right here, which it does eventually, but it like kind of messes around within this area before it comes down. Comparing this to the 4-hour chart, let's go to the 4-hour. You can see that it's where I mark it up at. Okay, so like right here, it's the same situation, but it's a lot smoother. So you're not going to be, worried about price going up and then going sideways, because you only see a few, like, X amount of candles right here. If you're on the 30-minute, it still works, but it just depends on how your trade psychology is. If you're like really good and you're like, okay, screw it, I know this is going to play out, then that's completely fine. But most people aren't like that. So if you see price jumping around all crazy like this, if you enter this trade over here, most people would have freaked out, because look, if I replay this and then you're like, all right, cool, price is going to come down, right? And then it comes down, you're in profit. You're like, all right, perfect, this is nice. And then out of nowhere, it just shoots up. So right here, and then it shoots up, and people start to freak out because, trade psychology is a big thing. A lot of people don't have it. So as it comes up right here, people start to get worried because they're like worried that price is going to shoot up and stop them out. But if you're on the 4-hour, you kind of just zone out, because it's an intraday into swing trading. But you can see right here that it kind of plays games on the 30-minute. Like comes up, comes down back into profit, and it shoots back into the negative, and then it comes back. Like it literally plays for like how many days is this? Plays around for like 2 days, like 2 full days before it actually plays out. And it's kind of hard for you to really grasp this on the 30-minute, because you're kind of anticipating price to move, within get in and out of the trade within a few hours. However, if you're trading on the 4-hour, you can kind of just take the trade and then leave it alone, let it play out. Like obviously over here it plays out, but it's a whole different story when it drops in a profit right here, and then you miss this, and then you're like, crap, I'm in negative. But it eventually plays out like it did over here, which is nice. I mean, if you have the trade psychology for it, then yeah, so be it. But me personally, I don't like to be on the chart like all day, because I wait for the candles to close. So like right here, you probably would have gotten a better entry, because you can see price comes up and then it breaks below right here. So if that happened, I probably would have taken a sell right here. So I mean, it's a double-edged sword. If you're trading on the shorter time frames, you're going to have more entries, but they're going to be riskier trades. And obviously, if you're trading on the 4-hour, you're going to have less entries, but it's going to be a lot more accurate. And then right there, you probably would have hit CP a lot earlier than you would have if you took this later position. But here's the thing. If you took this one right here, you could have stacked that. And as price came down again right here, you could have taken a second one. So I mean, it really depends on you as a trader, how you want to trade, but it does work on all time frames. Deswell said, which broker has TradingView? So Deswell, the brokers on TradingView are, I mean, there's a whole bunch to choose from, but let me show you. On here, let's see, brokers. So these are all the brokers that are on TradingView. It's Tradeovate. This is like a futures broker. Oanda, which is a Forex broker for currencies. TradeStation, futures broker. Amp Global, futures broker. Alpaca is a stock broker. Forex.com, this is what I use, what most of us use. And then there's a couple other ones here that I've never heard of. Like I've never heard of Gemini. I'm assuming it's a crypto broker. And Iron Beam, which I've never heard of before. But I mean, if you're familiar with these brokers, you can use them. But I would just stick with Forex.com. I mean, they've been perfect. Like I've been using them for years and I haven't really had issues with them. And on top of that, they're US regulated. So that's a plus as well. Okay, so let me go back to the questions. We have another question from Alvin. Alvin said, when price breaks your zone, how many pips do you usually go for? So like I mentioned earlier, I like to go from zone to zone. So we took this trade over here, right? Yesterday. Let's go back to this chart. So we took this trade over here yesterday. And generally what I like to do is I like to put my stop loss and CP at the previous swing. So I will enter a short right here because it broke this zone. And I'll put my stop, I probably put my stop loss at the previous swing, which should be up here for about, I just round that to like 65 pips. And then I'll put my TP at, the same exact point. But then what I would do is I would put my TP1 or TP2 before the zone. Because like what I mentioned before is like price generally, once it reaches the zone, it'll probably either reject off it or it'll continue down. So although my full move would be down here, what I do is I, just to be safe, once price reaches this point, like near the zone, I just move my stop loss here because you can see right here, I didn't get stopped out because you can see it broke into the zone. And then instead of it rejecting off, like it did reject it a little bit, but it didn't come enough to stop us out right here in profit. So once you do this, you guarantee profits. I would have guaranteed, let's see, 32 pips. So if price was to reverse up on me, I'd get out 32 pips in profit. But if it comes down to full TP, I'd still make 65 pips. So, it's a win-win situation regardless as to how your position is playing out, as long as you manage your risk properly. Because at that point, I would move my stop loss to here and I just guarantee, profit at that point. And this is pretty much what we do for every single trade. That's why when I post up the signals, like, like the odd cat right here, I have 3 different targets. So generally what I do is I'll put a target somewhere like over here. And then what I do is once price reaches this point, we're supposed to move. Well, I advise people to move their stop loss to this point. So same situation here, price was to reject up, you would guarantee at least like 15, 14 pips right here. So that if that happens, you're still you're in profit and you don't have a loss. Because instead of taking a huge risk of 65 pips, you're guaranteed profit right here. And trades are going to come and go. So even if you get stopped out in profit right here, it's completely fine. We'll enter another one later, because for everyone that's been here for a while, you guys are familiar that our win rate's pretty high here. So like, even if we get out in profit right here, we're going to just move on to the next one. Like, so for this one right here, if you would have gone stopped out at this point for like 30 pips, we took a second entry right here because price broke the zone again down here. So we would take another entry here and there goes your next TP right there. And if you end up getting stopped out halfway here, you just add those together, 30 and 30 at 60 pip profit. So it just really depends on how you want to trade, how you want to manage your risk. But me personally, when you start trading a bigger account, it's more so about eliminating your losses rather than going for these home run wins. Because if you're trading a high win percentage strategy, odds are if you just keep winning and winning and winning and don't lose as often, you're going to end up in profit at the end of the week and at the end of the month. Let's see. Deswell said, is it okay to trade the 1 hour? Yep, it's perfectly fine. So let me go on the 1 hour right here. as well. And you can see same situation right here. Actually, you know, if you're trading on the 1 hour, you'd hit a lot more entries. So as you can see here, price came up, came down, but we wouldn't take a sell here because we, you know, the momentum's still going up. So you have to wait for a sell signal, but right here we have a sell signal, right? So as price broke this zone right here, you could have entered a short right there and you would have hit full TP for 53 pips. And then again, right here, as price broke below here, you know, we still have a sell momentum. Once we have a, you know, price breaks this zone right here for a bearish candle, you can enter another short right there, and you would have had 2 wins right there for 53 pips. And then again, right here, once price breaks this zone again, you know, a third time, there goes your third entry. So it just really depends on how you want to trade it. Me personally, I don't like to be on the screen all day anymore. I used to be on the screen like 24 hours, like literally all day. But I wanted to have a life, you know, outside of trading. So I used to trade on the 30-minute, but I changed from the 30-minute to the 4-hour. So like now I have time to do whatever I want, because on the 4-hour, each candle closes at the same time every day. Each candle closes at 2 a.m., 6 a.m., 10 a.m., again at 3. Oh, it's the spread. So like technically it's 2 p.m., but I move it back to 3 p.m. when the market reopens. So it'll be 6 a.m., 2 a.m., 6 a.m., 10 a.m., 3 p.m., 6 p.m., and 10 p.m. So those are the only times that I'm on the chart. I literally don't stare at the chart all day, like, you know, how a lot of people do, because that will lead to over trading and it'll, you know, it'll cause you to force trades. But if you're trading on the 4-hour, I literally just pull up the chart, you know, a few minutes before, like say right now it's 4 o'clock. The next candle closes at 6 o'clock. So once it hits like 550, I'll just pull up my charts and I'm like, all right, is there any zone entries here? If there's a zone entry like we spotted right here, which happened at 6 a.m., you can see the time on the bottom, the timestamp. Let me just put an array right here so you guys can see. Yeah, vertical line. So this entry right here happened at 6 a.m. You can see the time right here, right? So I woke up, it was like 5:30. I was like, all right, cool. I got a few minutes to check out the charts. I pulled up every single pair right here. I literally go through each pair one by one, and it doesn't take that much time once you get good at doing this. So I woke up at like 5:30, checked the charts. I saw this was going to close at 6 o'clock. So once I saw that, I was like, all right, I marked it up, put my entry right there. And then I set up the signal over here. I'll just go on the premium because it'll show the timestamp there. All right, cool. And then right here, you can see that I sent this at, oh, so for this, we did a late entry. This was at 10 a.m. because I spotted this at 6 a.m., but the FOMC statement was going on at 7. So I was like, all right, I'm going to chill out for a little bit. But then I did send it on the following candle. Right here's 10 a.m. because what happened here was price came down and then it pulled back up. So as it pulled back up, that's when I put the signal out. And then that's how we got filled. Because generally, you know, as you guys know, I don't like to trade during news because it's just a little too risky. You know, this whole week was a crazy news week. Like literally it was news after news after news, literally all week. Even this morning, like every morning, the FOMC, basically the Fed, they were testifying, you know, Powell was talking. So he talked at 7 on Monday, Tuesday, Wednesday, Thursday. And then tomorrow we have like some medium news. But that's why I didn't call any trades at 6 o'clock. Even though this entry showed up at 6 o'clock, which you could have entered at 6, I waited till 10 because I wanted to be extra careful for you guys because, you know, it's just a little too risky if you entered a trade when the Fed was speaking and then, you know, it ends up spiking up on us. So that's pretty much how I enter that trade and how I enter every trade that I give out in the signals. You know, if you guys have access to the K2 indicators, so this is the course right here. If you guys want to see the strategy that I use for every single signal, like literally you guys could trade exactly how I do for every single I call. For every signal, I use this strategy right here, the K2 SR zone trading strategy, and I do it on the 4-hour chart. On top of that, I use the K2 pivot strategy as well, because both of these strategies, they kind of line up with each other because they're very similar. They just provide for different entries, but I trade both of them on the 4-hour chart. So literally every signal here that I send out, you guys can spot the same exact entry that I'm doing. It's super simple. Like I never change it up. And you know, that's why K2 has been so accurate with the trades, because I don't go from strategy to strategy. I literally just use one strategy that I know works and it works all year round. And you know, it provides results. Like if you guys are familiar with our results for, you know, so far, let's see. Yeah, if you guys look at our results for the year, I literally, like, every trade here has been documented. So you can go and just search anything here, like all the odd JPY pairs or signals I sent out, and they all come up right here. If you guys want to search it, you guys can literally, like, all of these trades have been documented. So all the trades from this year for 2020, from January till now, we have 402 wins and only 133 losses for a gain of 14,000 pips. And this is just Forex. If you want to move over to, indices, which is just my US 30 calls, the results for indices are way crazier. And the thing is, I just started trading indices in February, and you guys are familiar with the strategy. I have it on here too. The K2 daily US 30 strategy, this is the only strategy I use for the signals. So if you guys want to trade signals, like trade exactly how I do for the signals, but you don't want to wait for me to like call out trades, you can do it all on your own because this is all available to you guys. So, looking at the results for indices, just from May until now, we have a total of 58 wins and 12 losses for a gain of 71,000 pips. And I literally just started trading US 30 like this year, like in February. So I was trading this on my own, and then what happened was, everyone wanted to trade how I was. So like this is when I started documenting like all my trades from May until now. And we're going to keep doing it for the rest of the year. So if you guys follow K2, you guys will see these are updated every single week on Friday. So everything just gets added up at the end of the week. Let's see, we have one question. Alvin said, how can we get your zone indicators? So if you guys don't have access to the indicators yet, you can just go to the website. We still have the trial going on. This is k2trades.com. And you just scroll down to the bottom. And when you scroll down, it'll have the option here for the trial. So normally it's 150 a month, but for the trial, you get the first month for 50 bucks, and you get all of the video courses, you get all of the indicators, and you get access to all the K2 premium groups. So once you have all this stuff, you'll have access to the course right here, and then it'll break down literally everything for you, like from the beginning to the intro to how to use TradingView, how I use it, the basics, trend lines, support, resistance, etc. And then it comes down to the strategies right here. So if you guys want to learn the intraday strategy, it's available right here. The momentum strategy, it's right here. Scalping strategy is right here. And then the K2SR indicator that we were just talking about right here, and then the strategy as well. So everything is literally broken down for you guys here. And then this is one thing that someone was asking me about earlier too. If you guys want to see our results for every trade that I've called, they're all down here. So if you go to K2 Trades Results plus History or whatever, you just click on this, and I have every trade documented here. So these are the trades for the month, each week, and then weekly breakdown, and then every single trade I've taken is broken down right here if you guys want to go back test it. And it's using the same strategy that I just discussed, literally every trade. Because I know a lot of people are like, oh, you guys don't document your trades. I'm like, yeah, we do. They're all here, literally. So you could go down every month and everything's been documented here. And then if you have the indicators, you can go and check the strategy yourself and see if they work. Because, literally, if you look up any of these trades, you'll see that they line up on the chart. And that's how you'll know that they're like legit. But yeah, Alvin, so once you sign up to, the trial, you'll have access to the indicators. And then once you have the indicators, you can just go to indicators right here. You go to invite only scripts right here, and then you'll have access to all of the K2 indicators. And then you can start applying the strategy yourself. And then at that point, you don't need signals because you're just going to take the trades on your own. And then, so what happens is a lot of people, they have the signals, but they don't use the signals like directly. What they do is they'll mark up the chart on their own. And then if their stuff matches up with the signal, they're like, okay, that's for sure. Because then they spotted the same exact trade that I spotted, and then they take the trade. And it's real simple. Sammy said, yeah, no problem, Melvin. Deswell said I was trying to find your results. Yeah, Deswell. So if you go to the website, you just go to, so this is what it looks like normally. Yeah, so this is what the course looks like. And you just scroll down to the bottom. And you guys don't have to pay to see this stuff. Like you guys can sign up for the free course too, like right here. If you guys don't want to, if you guys just want to get a feel for K2 and see how everything works, just click here for your free access. And then you can click here to enroll for free. And then this will give you pretty much all of this stuff, but you guys won't have access to the indicators. That way you guys can see exactly, how everything's lined up. You just won't have access to the K2 indicators or the premium groups. But yeah, Deswell. So if you scroll down to the bottom from up here, just scroll all the way to the bottom, you'll see the K2 trades plus results right here. And everything is broken down up until last year or 2 years ago, August 2018. And then up till today, July 2020. So I'm going to put August up shortly. That's already done. And then September is going to be up shortly too. Usually I have to wait a while because, I like to do everything all at once. So, once the month is over, I'll just go ahead and pretty much make an Excel sheet with all the trades, which I already have. It's not like something that I just do all at once, but everything's pretty much set up. And then once the month is done, I can just go ahead and upload it to here so you guys can see everything. Let's see, we have one more question from Sammy. Sammy said, do you trade NFP? So me personally, I don't trade news at all. I used to trade news before, but trading news is literally gambling because it doesn't matter if the news is good or bad. It doesn't matter if what you think is going to happen. Price can go up or it can go down. Like literally it'll do whatever it wants. So it's like nearly impossible for you to really guess how news is going to work. And if you guys go back to like previous NFP data, you'll see it's pretty clear because when COVID just happened and unemployment was at an all-time high, price didn't dump like it was supposed to. Price ended up going up, and it was such a mind fuck to everyone because everyone's like, NFP. It's and the problem with that is that a lot of people know that price was supposed to go down, and that's why everyone was banking on it. But the market makers and institutions aren't going to make it as easy on you. They're going to play with you until like you get stopped out. So like say right here, if you're going to take this trade, I'm just using this for an example. This isn't really an NFP trade, but like think of this as NFP happening and COVID just happened and people are like banking on people selling, right? So like say you got the signal and then you're ready to sell and it looks like price was reversing from this point because it's starting to pull back. It rejected off the zone, and then it's pulling back, right? So a lot of people will just put, a short position right there. They'll keep their stop loss tight because they're like, oh, there's no way it's going to shoot up. And then what happens is the market makers push price up. They stop everyone out. And then right after that, once everyone's stopped out, they dump price right back down like that. And this happens all the time. This is like for every news event. It's not just NFP, but it's like literally any news event. Like that's why I don't trade news at all. When news is happening, I don't trade it because that's like when the market's most manipulated because they know that a lot of people are betting on it. The news, trading news is literally gambling. So they know there's a ton of people that are trying to make a quick buck trading news, and they'll find creative ways to screw people over like every single time. And I mean that's just how trading is. So it's your job to like not fall for their traps, but the problem is the majority of people fall for the traps anyway, so they're going to make their money regardless. But it's like it's better to just stay out of their way and trade when they're not manipulating the market rather than trying to make quick profit off news. Because I mean I used to trade news all the time when I was a beginner, and I thought it was super exciting until I realized that it's not sustainable long term. Like you could literally trade news all the time and you'll have like a couple wins, but then once it doesn't go your way, you're gonna blow your account, and that's exactly what they want. But I mean, if you like to trade news, like feel free. But me personally, I don't trade it at all. It's just way too risky. Let's see. All right, so it looks like that's it for the current questions. So if you guys have any other current questions, feel free to let me know. Otherwise, I'm just gonna go down the chart and see if there is anything that we can take for the 6 p.m. candle close. So right here again would be another entry, like I was just talking about with the zone strategy. So basically, I'd look for momentum. Oh, wrong indicator. Yeah, so right here we got a buy signal, right? So if this was to close above here and it closed above the zone, then I would take a buy position right there. I put my stop loss down here at about 50 pips. And then I would probably put TP1 somewhere around here, and then I put TP2 somewhere around there, so that if price was to come up, and if it does reject off that point, I guarantee these profits right here. But if it continues further, then I hit full profit. So this would be a good entry, if it closes, but we'll just have to wait and see how that plays out. And I'll put the requirements here just so I know there's some new people here, so I'll go over that strategy just so you guys can see exactly, what I'm talking about, because I know there's some new people here. Let me just hide this. And this is going to be the K²SR zone trading strategy. And this works for all assets, all time frames, but I do recommend using it on the higher time frames. So first, you're going to identify direction of momentum using K2 TS indicator, or I'll put K2 momentum indicator. Next, you're going to identify a break and close past K2SR zone. And this is going to be optional, but I do recommend it because I actually use it myself. Confirm trend using K2 pivots. And I only do this because, if you got, depending on how long you guys have been part of K2, I'm a very careful trader. Like I value accuracy more than, number of trades and number of profits. And that's why we have such a high win percentage here, because I'm very careful about the trades that I'm taking. But, first you're just going to identify the direction of momentum. So right here we have a sell signal. So obviously momentum's coming down. Right here we had a buy signal, momentum was going up. Whenever you get a momentum signal, basically what you can pull out of this is that once you get a momentum in one direction, price is generally going to go and test the next zone like it did right here. Then it rejected off it, right? We got a buy signal right here. What happened right here? It pushed up to this zone, and then it came back down. Once we got a sell signal right here, what happened here? It pushed down to this zone, right? It literally goes from zone to zone. Like, it's really simple if you're able to simplify it. And then again, right here, we got a buy signal. It rejected off this zone. It ended up testing this zone right here. And then right here, we got a sell signal, but it was within this zone, so we wouldn't have taken this trade. But right here, we got another buy signal. And what happened? Same exact thing. Comes up, tests this zone, comes down. We got a sell signal. What did it do? Test this zone. Once it breaks below this zone, what's going to happen here? It's going to test the next zone. Super simple. So right here, I'll go over let's go over this entry so that you guys can see. First we've identified the momentum using the K2 momentum indicator, and obviously, momentum is going down from this point. Next, you'll identify a breaking close past the K2SR zone. So you can see right here, price broke the zone and it closed outside of it. So once you have all this, you can enter a sell position right there. Put your stop loss at the previous swing, which would be right there. We'll just round that to 55 pips. And then, like I mentioned before, it's really up to you. Everyone has a different exit strategy. Depending on your risk tolerance, you can put your stop loss, or you can put your first target somewhere around there, just in case price comes down and then it rejects off this zone. But, most of the time you'll never really know until it happens, because it can also continue downwards. It doesn't have to reject off it. So if we let this run, you can see right there, hit full TP. And then what happens here? Like exactly what I mentioned in all of these other examples, once it reached the bottom of the zone, it rejected right off it. Just like, it's literally clockwork. Like it's so simple, but I know it looks so simple that people won't even believe this. Like, it's literally marked up on the chart, but it's too simple for a normal trader to believe it, even an experienced trader, because everyone is so consumed with trading being so difficult and being very tricky. But if you just simplify it, you could be very profitable long term. If you just follow the rules and do what's taught, because I've been trading for 10 years, so I'm familiar with all this. I know that this happens literally all the time. You can see right here, we back up all the way to June, right? The same zone has been tested for months, since May. It's come down, rejected off it, came up, came back down, and it's literally just bouncing from zone to zone. Let me take off this indicator. And you can see right here, it's super clear that price literally goes from zone to zone. It goes from zone to zone to zone to zone, and it literally just keeps bouncing back and forth. So if you guys are able to forget, the way you traded previously, because a lot of people have learned how to trade. I'm not going to say there's a wrong way to trade because, there's so many different trading strategies, but there's a lot of more complicated ways to trade than just doing this, which has like been proven to work time and time again. Let's see. So we have one question from Sammy. He's asking, how is the market going to be next week? So let's pull up the news. Next week, it looks, we have NFP next week. So it's, NFP week is a hit or miss. It could either be a very good week for us or a slow week or a shitty week. I mean, you won't really know because the thing is, so there's a lot of people preparing for NFP. So depending on, let's see if there's any data here yet. Yeah, there's no forecast yet. So there's going to be a forecast probably Sunday, maybe Monday. But, throughout the week, there's just, it doesn't really look like there's any, well, I mean, there's literally news every day because this is NFP week normally. So although there's news week, I mean, there's news all week, they're all medium news. So this could either affect the market heavily or it could affect it not at all. So, and we won't really know until it actually happens, but we're probably going to be trading Sunday, Monday, and then we're probably going to take it a little easier from Tuesday on up. Well, and we'll see how Monday and Sunday play out, because there was some weeks during NFP where we made like 500 pips like on the Sunday, and that's like unheard of. And there's some times where there's like literally no trades during the entire week, and then Thursday just becomes all crazy. So it's really hard to tell, Sammy. But we'll just have to see how it plays out, like when it actually happens. Because like for me, if you guys are familiar with like how I analyze the charts, I don't like to predict what's going to happen, a week from now. Like this right here, a lot of people probably will be predicting that, price is going to be over here by next week, or it can be like way down here. But I don't like doing that because if you're predicting how the market's going to be and it doesn't play out your way, you're just going to doubt yourself. So what I generally like to do is I like to predict how market, well, not really predict, but react to market when it breaks certain structures. Like right here, if price was to break up here, then I'm like, all right, cool. Now I can analyze this as, a push upwards. However, if price closes below here, we get a sell signal, then, obviously we can predict price, well, not predict, but we can react to price in a downward just momentum. So it'll just really depend on how it moves from here, because you can see obviously this zone right here is a critical zone because price generally rejects off this point time and time again. So until it breaks below, then it's probably going to keep moving within this range right here. It's just going to keep bouncing around until it goes around. Yeah, too. An NFP is a non-farm payroll. So basically, they're gonna be releasing unemployment data. So obviously, if unemployment's high, then the U.S. dollar is going to be weak because, obviously, if the economy was good, the U.S. dollar would be stronger. But that will affect a lot of other pairs because if the U.S. dollar is weak, then the Swiss franc, which is a safe haven currency, this is going to be strong. So if the non-farm payroll data is going to be bad and it plays out how it's supposed to, based on basic fundamentals, then we could probably see this drop because the Swiss franc's probably going to gain in strength. But if it's the opposite, it'll probably go up. So it just really depends on how the market reacts to the data, because it's not, the market's not always going to react the way that we anticipate it to. It might play around and like try to stop everyone out before it actually does, which is completely normal. Let's see. So we got one more question from John Ryan. How do you determine the 50 pip? Sorry, John, I think I missed your question when I was going over it. But, like I mentioned before, every trade that I take, the stop loss is going to be placed at the previous swing. So the previous swing is going to be right here because price comes up, it swings down, and then it swings up. So it'd probably be around this area. So the swing would be right here, but I'd probably move it a little higher to like 55 pips to like this point. to give it some cushion to cover the spread and to prevent getting caught in any stop loss hunts. Because, so here's the thing, you know, if other people are entering the same trade as us, it might not be based on the same strategy, but you know, what if the requirements line up the same as ours, it doesn't matter if it's the same strategy or not. The banks and the institutions know that everyone, like not everyone, but majority of people put their stop loss at the previous swing, which should be right here, right? So what happens is when they go on a stop loss hunt, they shoot price up just a little bit above it from this point right here. Because I'm sure you've seen this before. I'm sure everyone has seen this before, where price shoots up super close to the stop loss. And then what happens from there? It shoots straight down its TP. But then whoever had their stop loss too close, they would have gone stopped out. But if you had your stop loss, you gave it a little bit of cushion up here, you would have, you know, survived the trade and won, and pretty much won eventually. And this is like something that I've learned, you know, over the years too. It's like you can't fall for their tricks, because this is one of their tricks. They'll just push price up, they'll spike it up, stop everyone out, and then dump it straight down. And this happens all the time. This is like textbook, like chart manipulation, price manipulation. And this is something definitely to look out for. But yeah, John, so basically what I do is I put the stop loss at the previous swing, which would be right here. But then I would add some cushion for the spread, which right now it's 3 pips. The spread plus just some extra cushion in case, you know, this happens. Let me see if I can find an example here where that happened so that you guys can see what a trap looks like in real life. I mean, so this would be one right here, actually. Oh, this is a perfect one, actually. Okay. So let me go over here. So this was a sell right here. You put your, see if you automatically do it, TradingView puts it at the previous swing right here, which would be about 43 pips, right? So I'm just going to mark that right there, just so you guys can see where that line is. But me personally, I would put my stop loss at this swing up here to give it that cushion, because there's 2 different swings right here. So obviously price swung up, swung down, and then it swung up again right here. So this would be the most recent swing, but I put it at the second swing up here. And then you'll see exactly why when we move forward. Let's round that to 6. I don't like the doubles number, 666. All right, so 66 pips. All right, so all right, right here, you can see price comes down. And then what happens? It shoots right up to stop everyone out, right? Whoever didn't move their stop loss and profit. So it spikes price up. And then it would have stopped whoever put their stop loss right here. And then what happens right after? It shoots all the way down. Like eventually it does. There you go. And this happens all the time. You know, this is a common thing. And this is what I mentioned earlier too. Like they don't spike it right to the swing. They spike it like a little bit above it to stop everyone off. So everyone gets stopped out. People are mad. And then whoever had their stop loss a little higher, you know, would have survived the move and would have hit full TP eventually. See, and the key here is not to trade like everyone else. Like literally everyone would have put their stop loss right there at the swing, but you know, we're not everyone else. So we move it up here. Because if you trade like everyone else, you know, you're going to fall for all these traps. And that's why majority of people aren't successful at trading, because they're unable to find other ways to trade, or like ways to outsmart the banks and the institutions. Okay, so let's see. Portia, the Bulldog Scotty channel said, "Hi, Shawn. Can you show me how to get the K2 signal to alert on TV, please?" Yeah, Portia, sure. So what you do is make sure you have the K2 TS indicator on your chart. So you can see right here, I have it on my chart right now, right? So once you have this on your chart, just click on alert up here. And then on condition right here, click on K2TS, and then change this right here to signal fired. This way it'll give you a alert if it's a buy or a sell. So you can have it for buys only or sells only, or you can have it for both. And you know, it just makes more sense to have it for both. And then over here under options, you can have it either only once. So like once you get a signal, it'll give you a signal and the alert will turn off. or you can have it set to once per bar, so that every time it appears, so say it appeared right here, you get a signal, and then it'll reset, and then once you get a signal again, like down here, it'll give you one as well. This is one that I used to use. This is good if you're trying to get like a head start on trades, but you'd still have to wait for the candle to close. And here's the other option. So if you have it once per bar close, then you'll only get an alert if the signal closes, because I'm sure you're familiar with this, with the signals, like sometimes they disappear. So they'll appear, and then if they don't close yet, they could disappear, and then they can reappear. So, me, I don't like to, jump the gun and get into the trades a little too early. So instead of having once per bar, I changed it to once per bar close, because I don't want to have like a ton of alerts to my alert box over here for something that I'm not even waiting for, like I'd rather wait for it to actually close before actually giving me an alert. And then right here, you can set an expiration time, check off here if you want the notification on your app, if you want a pop-up, email, etc. And then you can call the alert whatever you want. So you can put like odd CHF 4-hour K2 signal. And then once this happens, you'll get an alert that'll be sent to you. So for me, these are all the alerts I have here. I pretty much set an alert for literally anything that I'm looking for. So for the most part, it's usually if the trade's filled, and then the TPs right here. I have like TP1, and then the number of pips right there. And that's how I send you guys the updates on, if we hit TP or not, or if we hit stop loss. So I have alerts for, TPs, stop loss, and then the US 30 for the mornings as well. And then these are on my alert logs right here. So whenever I get an alert, pops up right here. And that's pretty much it. It's pretty simple. And then, so one thing too, so I have it on my 4-hour chart right here, right? If you want the alert on the 4-hour, then you'll set it on here. If you want it on the 30-minute, you just go over here, change this to 30-minute, and then set up the alert on there. So change this to K2CS, signal fired once per bar close. And then down here, you can change the message. You can do like odd CHF, 30-minute K2 signal. And then every time it comes up, you'll get that alert. Let's see, John said, how do you get that alert list? Can't find it on TV. So it's right here, John. If you look on the side, it's called, it looks like a little clock, and it says alerts when you go over it. So you click on that. And then yours will probably be blank because you probably haven't set any alerts yet. But once you set alerts here, you can, they'll come up on the list. So I'll just do this for an example here, just so you guys can see. So this is my current alert list. I'll just change this to signal fired once per bar close. And then I'll set this to odd CHF, 30-minute K2 signal. I hit create, click continue anyways. It'll just tell you that it repaints. So it says that, the signal could disappear or not, but if you have it set to once per bar close, it's completely fine because you're only gonna get an alert if it closes. Click OK, and there you go. You can see right there, odd CHF, 30-minute K2 signal. So every time that a candle closes, then I'll get an alert and it'll pop up down here. So if I wanted to look at that, I'll have my message there, like the US 30 10-minute K2 or CHF JPY TP2 hit for 30 pips. It just really depends on which alerts that you guys have set up. So I'm gonna delete that because I don't really need it. But yeah, so it's right there on the right side. Yeah, John. So John says, oh, found it. It's on the right side. Yeah, so it'll be right there. And then I think that's about it. I don't know if there's anything else that I can cover with the alerts. But for the alerts, you can literally set anything. So if you want to set them for the other indicators, you could too, like the K2SR. If you want it to alert you when price crosses, you can do that as well. It's just really up to you. All right, cool. Let's see. Let's see. I don't see any other questions, guys. So if you guys have questions, just put them in the chat, and I can take a break from like whatever I'm doing. Otherwise, I'm just going to go down the list again and see if there's anything worth taking. All right. Now that that's covered, let's take a look at, I think I was on Odd CHF. All right. Let me step away real quick, guys. I'm going to grab this call. I'll be right back. All right, I'm back, guys. So let's see. Deswell said, does Forex.com allow you to close trades in any order once in profit? So Deswell, when you take a trade on Forex.com, like say we took, this was something I was talking to John about as well. So basically, if you enter a, let me use an example. So say you entered like a buy right here for a standard pip for a 1.00, right? Say you are up here and then you wanted to exit half of your position. So if you enter a sell position in the opposite for half of that, which would be 0.50, then you would just continue with that buy position, but it'll close out half of your position. So what they do is they average your positions out. So let me see if I have an example here. Yeah, so like right here, say you had, or here, we'll do this actually. Okay, no, so this is cool here. So say we enter a buy right here, and then you enter a buy for a standard lot, which is a 1.00. Say you wanted to exit at your TP1 somewhere over here for half of that position, right, for a 0.50. So what you'll do is you'll, I want to show you guys an example, but it's kind of hard to, I don't want to do it on my live, obviously, because I'm have real money in there. So let me just open this paper trading one. Okay, perfect. So right here, say if you wanted to enter a buy right here, right? So we enter a buy for, let's just say a standard lot. So it's just easier to see. Standard lot, we'll enter market for a buy. So you can see right here that we have a standard lot. I'm just waiting for it to move up a little bit. And then say you wanted to close half of that position, right? You just enter a sell position, the opposite, for like half the position. And then you can see right there, it went from a standard lot, 100,000 units, to half of that, which is 50,000 units. And that's equivalent to a 0.50. I think John's still here too. So John, if you're looking at this too, you can see what I was talking about earlier. You can see that we entered this position at a standard lot, but I closed half of it. So now this is going to be half of that position. And then they just average out your position. So you can only have one full position at a time, but depending on, you know, say you want to half that again. So you have a 0.50 buy position right now, right? You want to sell half of that again, you'll just sell half of it. So you do half of that, you enter another sell, and then it dumps it to 25,000 units, which is a 0.25. And then say you wanted to add more onto this. So if you wanted to keep adding more to this, you can go the opposite, enter a buy, and then you can add on like a standard lot if that's what you wanted to put in. And then it just increases your position. So it just averages out your position, and then your entry is gonna, you know, move adjusted to wherever position was at that time. Let's see, Wayne said, is there a pivot level 1 through 4 that should be respected more than others when looking for ejections off pivots? All right, Wayne, so let's look at that real quick too. So Wayne's talking about the K² pivots indicator. Sorry, I'm looking at the. I was looking at the messages. I saw Stone's message. He said, in a few years to come, people will be kicking themselves in regrets if they missed the opportunity of buying, investing in the crypto market. Yeah, I can see that, but I think for me personally, I think the crypto market's just, it's straight out speculation. Like there's the thing with the currency market and the crypto market is that they're like totally different because the crypto market's brand new. They don't have like data that goes around where you can you can identify like the history of data. So you can see right here, you can see odd CHF has been respecting these areas for like, a long time. But if you're looking at current at cryptos like Bitcoin, you can see that it's kind of all over the place. Which, there's nothing wrong with that. If you're okay with speculating, it's completely fine. Um, but it's kind of hard to really determine, where the bottoms are and where the tops are, because if you go back, see monthly, yeah, you can see that it's kind of like all over the place for the most part. Okay, let's see. So let me go back to the stuff that I was just talking about for Wayne. Let's go back to odd CHF. All right, Wayne. So I'm going to show you the pivots thing I was just talking to you about. So yeah, so basically the pivots, they're labeled by level. So the green one's going to be level 1, yellow is going to be level 2, orange is going to be level 3, and red's going to be level 5 or level 4. Sorry, my number is off. And obviously, they're colored that way specifically because you'll see the first pivot to the highest pivot. Obviously, the highest pivot will be the highest respected pivot, because odds are, whenever it touches this first pivot, it'll have like a light rejection off it. Let me see this. Sorry guys, I'm doing some admin stuff right here. Man, how do we get into these chats? All right, never mind, guys. Sorry, let me go back to what I was just talking about. I was just doing some admin stuff in the background, but so Wayne, back to your question. Yeah, these pivots are, yeah, man. I didn't realize spammers were on in the chats too. All right, cool. So we're good. So, all right. So Wayne, sorry about that. The pivots are they're identified by their strength by the colors and the numbers. So like I mentioned earlier, green's level 1, yellow's level 2, orange level 3, and red is level 4. So you can see over here, whenever price reaches the green or the yellow, it's like a light rejection. So price comes down, it rejects right back up. Again, right here, price comes down, it rejects right back up. And then as it comes down to the orange, you can see that this rejection right here is a lot stronger. Same situation right here. It comes down to the orange and it rejects up a lot stronger. But it's a double-edged sword because although it's a stronger rejection point, once price passes this area like it did right here, so you can see price comes down, it tests to this red, which is the last level of the pivot, it shoots right back up. But once it crosses it like it did right here, it ends up reversing. So, right here is like a clear example of as to, how strong these levels are, because price will come down, it will reject off the lowest pivot, and then it'll shoot up a few pips. So let's see, this rejection is like about like 50. Actually, it's not a lot. It's not a little. It's a pretty decent amount. So rejected off. Well, we'll go right here. It rejected off the green, but then it came back down. It didn't even reject off it yet. but then it came to level 2, the yellow, and then it rejected up further right here, 50 pips. As it comes down right here and rejects off the orange, it goes up even more, like 70 to 80 pips up here, or even 100 if you keep going up farther. And then again, right here, it comes down, it breaks through the green, like it rejects off it slightly, it breaks down further, rejects off this yellow, breaks down further, but then right here, you can see the huge rejection off the orange. So those are the colors. You know, obviously you can tell it's kind of common sense just looking at it, like green, yellow, orange, and red. It's kind of like a code green, code yellow, code orange, code red, depending on how strong the pivots are. So generally, if price comes down to the last pivot right here, I mean, it could be two, like it could do two things. It can either come up or come down and then reject off it pretty strong like it did right here, or it can break right through it and reverse on you. So it's kind of a double-edged sword if you're trying to aim for those, you know, farther pivots, because a lot of things can happen from, dang, how do we get all these spammers in the chat? Sorry guys, I'm gonna move. All right, cool. Sorry, I just had to clean out the chat, guys. But yeah, so Wayne, did you understand that when I was talking about the levels? If not, I can go over it like with a different pair. But I think it's pretty self-explanatory. They all go by levels from 1, 2, 3, and 4. All right, cool. Let me go back to the other question from Deswell. Deswell says, okay, but what if I have 5 trades open in all in different currency pairs? Yeah, Deswell. So like I mentioned earlier, if you have I'm just going to show you. I have it on paper already. So if you have 5 different trades, I mean, it's not going to make a difference. It's going to be the same exact thing. Say here, odd CAD, you have a standard lot for a sell, right? And then you have one for odd CHF. You have a buy here for a standard lot. Odd JPY, you have a buy here as well for a standard lot. I mean, it doesn't make a difference. If you have like 5 positions open, it's the same exact thing. I have, okay, 3 right there, 4 right here. We'll just enter a sell. And then again, right here, we can enter, another. So it doesn't matter if you have 1 position, 2 positions, 10 positions, it's the same thing. So you have, 5 positions open right here. And then say odd USD, you want to close half of this position, right? So we're in a sell right now. What we're going to do is we're going to enter an opposite position for a buy for half of the lot size. There it goes. It knocked it down to 5,000. Say you want to go to odd CAD. You want to close half of this position right here. Or say you want to close a third of it, 0.75. That knocks down to 25. It's still 1 position. Like what you're doing is you're just hedging within it until it. So say you have 25 here, right? You want to reverse it. So say you want to reverse it the opposite direction because we're in for a sell, and you want to have a standard lot the opposite way. You'll just put same lot size the other way, enter it, and here we go. Now we're in for a buy for a standard lot. So it doesn't really make a difference, how many positions you have open. You can go ahead and you can change anything you want. So say right here you have standard lot. You want to close out 80% of that trade, which is a 0.80. I'm still at 0.20 right here. And it's pretty simple. I mean, I think a lot of people make it a lot more complicated than it really is. Because I know if you trade on a different broker, say if you're trading on an unregulated broker, you guys are going to have like if you enter 2 positions, you'll have multiple lines here. So you'll have this right here for 20,000 or for 0.20, and then you'll have another buy right there for 0.20, and then you'll have another buy down here for 0.20. And I've noticed that's pretty common for an unregulated broker. But if you use like a legit regulated broker, that, you know, that has to follow the rules of like the FIFO. It's called FIFO. It's like first in, first out. That, like, if you're using a regulated broker, they have to follow the law, which is they have to follow this type of exits, because it's going to be first in, first out. So if you have a standard lot, you have to cover that standard lot before you switch over to the other position. And that just, that was created to prevent people from trading both ways. Because, you know, sometimes people put like standard lot this way, and then they'll put a standard lot this way. And then what happens is they both get spiked out on both sides, and then they blow their whole account. So they did that. They put that in place to protect a lot of traders that are gambling. Like, they're not really trading, because like, so say if you enter this trade right here and you're like, oh, if I could just bet, I could take a buy right here because I think it's going to go up, but then I'll just hedge that with the sell in case it comes down. But you know what happens? The market makers, they see these two entries right here. So what they do is they spike price up. Or here, I'll show you an example. So say you enter a buy right here. Let me just close this. Say you enter a buy right here, right? So you enter a buy, you're like, okay, I'll put my stop loss right here. And then you're like, I want to protect this position. So what I'm going to do is I'm going to enter a sell, and I'm going to put my stop loss up here, same distance away. But see, this is a problem here, because the market makers and the institution know that they have a position right here. They have a stop loss right here and a stop loss right here. So what do? They spike price up and they stop them out. They spike price back down. They stop them out down here too. And this happens so many times where like people would just blow their accounts. And then people are making complaints to their broker, like, you know, the broker screwed me or whatever. And that's why they introduced the FIFO law, where it's first in, first out. So in order for you to, so say you're in a buy, right? You want to enter a sell, you're going to have to sell off this entire position before you can enter a sell in the opposite direction. And that's just how normal like regulated brokers work. I'd say US regulated specifically. I don't know if the other brokers follow that rule either, like the regulated in the UK or like in Australia or something like that. But if you're trading with a US regulated broker, this is the norm, where the trades get averaged out into one position. Let's see. All right, cool. I think I was able to stop all of the scammers. All right, cool, guys. So let's see. So I think that's it for odd CHF. I don't know if I see anything else here. I'm just gonna close all these out so I don't forget about them. Oh, and this is a way too. So you hit partial close. This is what I was talking about earlier. I think is, hey John, if you're still here, this is what I meant about the partial close. So say you have an active position, right, for odd JPY, you can, so I'll just pull this up right here, and you have it for a standard lot. If you want to partially close it, you hit the X button right here, partial close. And then if you want to do half of the position, it'd be half of that, which is a 0.50, hit close. And then it closes half of the position, but you're still in it. So that's another way of doing it. If you want to do it manually, you can just enter a normal position and it'll do the same exact thing. But let me close these out. I just don't want to leave them open. But yeah, there's a lot of different ways to do it. But most US regulated brokers require that you have one main position and then you can just hedge within it. But yeah. Okay, cool. So let's keep going down the list. I don't think there's anything. Well, let's see if there's anything to take, because just the way that the market's moving, it's gonna, yeah, like this is literally an entry. Let me see if there's anything else we can take. JPY. See, like this would be another great entry. I don't remember why we didn't take this trade, but as price broke right here, that would be another sell right there. Tune's asking if I use Fibonacci. Me personally, I don't use it because I don't trade price action. I trade off momentum. But you can hit up Honest. I don't know if you're familiar with Honest in the group, but he teaches Fibonacci. I personally don't use it because I don't think it's I mean, it's somewhat accurate, but I don't use it well enough to understand, you know, how accurate it is compared to my trading style. Let's see. JPY. Let's see. Audit ZD. Nothing here because it's stuck within the zone. So price came down from here, rejected off this point, rejected off that point as well, back down here. And then here we go again, it's rejecting up. So in order for us to take a buy right here, we'd have to wait for it to give us a buy signal in order for momentum to swing that direction. Otherwise, if price closes below this zone right here, then we can enter a sell position right there. USD, same situation right here. If we entered a sell when it closed below here, could have rode that down for like 80 pips. Oh, so this might be a good buy right here. Yeah, and it's trending up. So I'll probably call this in a little bit. Let's mark that on my chart. CAD, we're in this for a sell. Yeah, so basically what I'm doing now, guys, if anyone's just joining us, I'm just looking through the our watch list to see if there's any trades that we can call at 6 p.m. Looks like there's only going to be a couple. It is Thursday, so the market's closing tomorrow, and that's for the most part why we see the market moving kind of slow. It kind of slowed down a bit. First, because it's we're in Asia session, but on top of that, the market's closing soon, so a lot of people are pulling out for the weekend already. Let's see, nothing here. Nothing there. For EG, if I see this drop lower and we get a sell signal, like we did right here, then I would take a sell. But EG is a slow pair, so I don't think it's going to move too much from where it currently is until the end of the week. Euro JPY. Yeah, so here's an example of what I was talking about earlier when I used the pivots, which is optional. So if you use the pivots, you can see how price is trending. So obviously when price is below the pivots are spread out and they're angling down in the same direction. That would confirm a downtrend. Vice versa, if price is above the pivots are angling up and they're all spread out. That would indicate a trend upwards. So right here, although we got a buy signal right here, and what could possibly happen is it's going to shoot up to this zone before either breaking above it or coming below it. So right here, this would technically be an entry for the zone strategy. Or actually, no, technically it wouldn't, because you'd have to wait for it to break this zone before you take it. But some people probably would have taken this trade. And the reason why I wouldn't take this is because price is trending down. Obviously you don't want to go against a trend that's going down so heavily, because this isn't really a momentum candle up. It's considered a small retracement or pullback. And then once we have a sell signal that comes up somewhere over here, odds are it's probably going to come crashing down. And this looks like it happened because of the news action. So it happened at 6 o'clock. The news today from the FOMC was at 7. So, whatever happened during the news, it probably shot price up a little bit. And then as soon as the news has passed, it shot right back down. So this is another reason why I don't trade during news. And this is another reason why I wouldn't have taken this entry if I was applying the zone strategy. But right here, if we get a sell signal, then yeah, I would take the sell and then write it down pretty much. But we'd have to wait for that to actually close out. So that's EJ, EN, So it looks like, well, technically this looks like it would have been a buy entry right here, but it did pull back. So whoever took this trade, you probably would have exited, or you would have moved your stop loss at least once price reached a certain area, like somewhere around here halfway, because this happens. So right here, if this was to close back above it, so price came up, came back down, and if this closed right here or somewhere above the zone, then I would take it for a late entry right here. And then I would ride that up to the next zone. But I think the Aussie pairs and the New Zealand pairs, they spiked up during the spread, because that's what we were talking about earlier. I think there was something up in the news about the Aussie that caused it to shoot up, or like right here, you can see that it created this like weird candle right here, like a little doji, but it was a big spike up and down. So that kind of seems like what happened here for, what are we looking at, EN? Yeah, because right here during the swap, so it came up, came down, and then it spiked right here. So it's probably getting manipulated for whatever reason. I think Sarah shared a couple of things in the premium. She sent a couple of news articles with, yeah, they were telling people to sell the Kiwi. Kiwi short for I don't know, is that New Zealand? I think it's New Zealand, the NZD. So if they're saying to sell it, then that means that Euro NZD will be heading up. So if you guys are familiar with this, so basically when price is heading down like this means that the second currency is stronger than the first one. So as price was going down, the New Zealand dollar was stronger than the euro. Vice versa, when price is trending up, like it is right here, this means that the euro is stronger than the NZD. So for this news right here, it says to sell the Kiwi. That's going to indicate that the New Zealand dollar is going to be weak. So people are selling it. We would anticipate price to go upwards. So, that goes hand in hand with the analysis we just went over. So if this does close above here, then I would probably take a buy. But we'll see how that plays out once it gets closer to 6. Your USD right here. So basically right here, price came down. We could have entered a sell position right here and then rode this thing down a full TP. And then again right here, as price broke below the zone, it would have provided for another sell entry right there. But nothing right now. I mean, that was a late entry that we could have taken, but we didn't. So let's keep moving down to the next pairs. GBP odd. So generally, if the New Zealand dollar is weak, the odd is usually weak too. So that's kind of why we're anticipating this to come down, because you can see all the odd pairs are kind of heading down. I mean, it's green right here, but just from market open. But if you look at the chart, they're all trending down because the Australian dollar is weak right now. Let's go back to GA. So there's nothing right here, but our bias would be for a buy. But even if it was to break above here, we have to wait for it to break like way above here before it confirms that it's going to move into the open space. See GC over here. It's stuck within these zones. You can see right here, price came up from here, then it consolidated a little bit, and it shot up, came back down, and then now it's rejecting off the zone again, right? So if it rejects off it, it's probably going to come back. And you can see right here that price basically just goes from zone to zone, like I discussed earlier. See, price came from here, broke the zone, came down, consolidated, broke the zone, consolidated, broke the zone, broke it down again, and then it started coming up, consolidated, and then literally just bouncing between the zone. See, GBP, CHF, nothing there. I probably wouldn't take this until it breaks above it. I go over here or below it. Because like I mentioned, whenever price gets near these zones, it can go, one of two ways. It can either break through it or reject off it. So you definitely want to take those trades like if you have confirmation. You don't want to have to just guess and hope that it goes in your direction. see GJ. This is a bias right here. This actually would be a decent buy from this point. It's just too risky. Usually my max stop loss would be about 100 pips. I think anything over that might be a little too risky, especially during these market conditions. Maybe if there wasn't the election going on and COVID wasn't going on, then yeah, I would take these bigger risks where I could take these full moves. But with COVID going on and stuff, you never know what's going to happen tomorrow. Like there could be a COVID vaccine that's released like tomorrow and we don't even know about it. And then the yen would probably lose its strength and it'll just skyrocket. And you guys have seen that, like during COVID, when COVID first started, that's when there was a lot of spikes in price. Like you can see over here in March, see this huge drop? So this huge drop was due to COVID because the Japanese yen is a safe haven currency. So right here in February, when the COVID news started happening, like it started dropping heavy because people are putting their money in the JPY because they weren't sure what was going on with the economy around the world. So they put all their money into JPY and then it came down super heavy. And then I think right here, yeah, so it was like March 18. This is when like they started, doing the tests and stuff, and they were announcing all of those breakthroughs with like Moderna and stuff. And then it came back up. And then it literally just went sideways for a bit until there was more bad COVID news and it dropped again in April. And then there was a COVID vaccine news, so it came up. And then bad news again, it dropped back down. So you can see right here that COVID and the elections affect the market super heavily. So that's why we have to be a lot more careful, when taking our trades. Because normally we could have our stop loss at like 150. When's the last time we had a stop loss, a target for like 150? Let me see. So the last time we had a target for 150 was in June for NZD JPY. We hit full TP right here for 150 pips. So, you can see that generally when price is moving nicely, I'll like ease up on the stop loss and I'll just let it run. But if we're in a time during, we're getting closer to elections, that's when I start to be a little careful. And instead of putting our stop loss at like 150, I'll put it at 100 just in case. So that's GJ's, nothing there. GN right here. Turn on the momentum indicator. So we did get a buy signal right here. So you can see his price shot up from here. As it closed right here, this would have been a great buy signal. I remember I marked this up. I didn't call it, unfortunately. Probably should have. So if I did, it looks like it would have hit full TP for 100 pips. Yeah, right there. 100 pips, easy. Nothing there for GU. So NZD CAD, this would be good if price closed below here. So if price was to close below this zone, you could take a short position right there. And then basically right down to the next zone. Let's mark that up in case. NZD CHF. 20 pips. Let's check the trend. Yeah, so it looks like price is, there's no clear trend here. It looks like it was trending down, but then it's like starting to shoot up. So this is a bit of a risky trade because, I personally wouldn't take this because the price was trending down at this time, but it might come up and test the zone. And then once it pushes up to this point, it'll be at a critical price point because once it gets to here, price could either break above it and reverse because it'll be breaking the last pivot, plus it'll also be breaking the zone. So it could probably reverse, or it can reject right off the zone and the pivot and come crashing back down. So this is what I would consider, a risky trade. Because generally I like to trade when price is smooth. So if I go over here, I turn this on, see like price is super smooth over here. So if we got this buy right here, obviously I would take this buy. Versus right here where, the pivots are starting to cross over and price is trying to reverse in the opposite direction. NZD JPY, let's see. Nothing here. I mean, if price was to close back below, so close back below the zone, then I would take a short position right here. So I'll just mark that in case. It looks like both of them are coming down. So yeah, NZD CAD, NZD JPY. It looks like the New Zealand dollar is weak right now. So I would definitely probably take one of these trades if it closes out in that direction. Let's see, NU over here. So price did close below here. So technically this would have been an entry. So technically this would still be an active trade right now if someone took it. You know, I didn't take it, but it looks like it could be good. The only problem is that the US dollar has been weak all year round. So it's just, you know, it's kind of hard when you're trading two weak currencies because you never know which one's going to gain strength and what's going to push it back up or push it down. So I'll probably hold off on that. I'll just mark it in case to look at it later. And here's UCAD. So if price was to close above here, then I would take a buy. But I don't know, like I mentioned earlier, the US dollar has just been weak. So if you look over here, it's literally just been coming down. So you can see UCAD from March. This is when COVID happened, right? So COVID happened right here, late March, like third week of March, and then it literally just came crashing down from that point, like way down here. And then it's kind of correcting right here, but who knows? Because next week is non-farm payroll. So depending on, you know, how the news is and how the US dollar is portraying itself, it could either, you know, shoot back down or correct back up for recovery. But we won't really know until, you know, something actually happens. USD CHF, same right here. Looks like the US dollar has been strong this week due to the FOMC. So you can see right here, the week started on the, what was it, the 22nd or 21st? So from the 21st, it literally just shot up because every day the FOMC was speaking. And, you know, as they speak, they're going to have a lot of good things to say, obviously. So right here, you can see that the US dollar is like slowly regaining strength, but who knows? Because once this is all over, it might come crashing back down. But yeah, it doesn't look like there's not really much to take right now. So I've looked at pretty much every pair. It looks like the only ones that are worth taking might be this CAD CHF, possibly, maybe not. I don't know. I'll have to look at it a little further once we get closer to the candle close. And then we have a couple more here, NZD CHF or NZD CAD, that we anticipate to come down because the news show that the New Zealand dollar is going to be weak. And then this correlates with NZD JPY. So we're anticipating this to come down as well. And then lastly, NZD USD, if price was to close again below this zone. But yeah, that looks like it's about it, guys. I don't see anything else here to really take a look at. I mean, we could look at indices if you guys want, but I don't really recommend trading it during Asia session unless you're scalping it. Let's see, I'll turn on the SRs. Let's open the higher time frames, like the 1 hour. All right, so I'll draw my zones right here. And then let's get this zone right here. There. There. Yeah, so these upper zones over here are kind of relevant because price is way down here, but it's just good to have them marked up just in case. So here's US 30. You can see it, same exact thing. So I was looking over the Forex pairs and they respect the K2SR zones perfectly. Same with any other asset. You know, we're looking at US 30 here. it does the same exact thing. So you could literally do that same strategy that I just explained on, you know, US 30 as well. But the thing with US 30 is that it's super volatile, and we're, you know, like I just mentioned earlier, we're in an election year. So, you know, you're going to see a lot of irregular movements. Like right here, you could have taken a sell and it would have been good. Let's see how many pips. To this next zone, about 1,800 pips. Again, right here, this looks like it might have been a flop. 700 pips. But you guys are familiar with US 30. Like, it's such a risky pair that you have to be in and out of it pretty quick. It's not something that I would hold for swing trading unless you have a big account. But yeah, it's just too risky for me. I'd probably trade this on the shorter time frames. Yeah, so like right here, let's see, turn on the indicators. It's a false sell, but it looks like it's going to continue down because you can see here that it also respects even on these on the shorter time frame. So on the 10-minute right here, you can see price rejected off this point. You got a buy signal, although it was invalid. It still shot up to the next zone right here. So we got a rejection off here with a sell signal. It's probably going to continue down over here. Or I mean, it was a false sell. So if we get a buy signal, it's probably going to shoot up. But yeah, I think that's it. So we looked over all the Forex pairs. We looked over US 30, which, you know, there's not really much to look at right now. Market's going to be slow during Asia session. But yeah, so it looks like it's about it for now. Let's see. Jennifer said, I received your weekly updates win loss email. Could you also include London US 30 trades? Jennifer, so I don't take the London trades. I've only taken one this week because I trade during US sessions. So during London, that's midnight my time. I'm usually asleep at that point. But all of the results that I send you guys out, those are all taken from the premium channel. So all of these trades that are sent here, they're all these are all trades that I take on my own account. So for the London session, those are usually sent out by Marcus. And he's not a K2 admin. He's just another member like everyone else, but he trades the same strategy during London sessions. So you can see right here, he calls the London calls, but when he does call them, they are, he says unofficial because he's calling them on his own. He's not, you know, it's not my trade. All of the results that I send you guys, those are trades that I take personally, and the trades that I send in the premium channel. So for London, I just have one trade. There's nothing else for me to really share, but it's going to be included within, you know, the totals, because all the totals that I sent here, these are all trades that I take on my own account. So if you go to the premium channel, or even if you go to the normal alerts, you can like literally search the chat for all of those trades. So say if I was taking US 30, it'll show like all of the US 30 trades that I take. So you can see right here, this is a K2 London session, but this is the first one that I've ever called because I normally don't trade the London session because I'm asleep during that time. And that's why I can't include, you know, all of the London sessions in the results because I don't take them. So all of the documented trades that are down here in the results, these are trades that I actually take. They're not just what I call, because literally every call that I, sorry guys, every call that I make, is the trade that I actually take. Like all of these calls right here are calls that I've taken and that I've traded live with you guys. So maybe London, like that'll be an addition later on. Like if I could, because next month I'm gonna start scalping with you guys like live. So I'm gonna go on this on YouTube Live or Zoom, and then I'm just gonna scalp live with you guys. So maybe next month when I start doing that, I'll stay up during London session, and then I can start taking more London trades. And then, you know, that'll be incorporated in the results. But currently all the results that are posted are normally going to be US session and some Asia session, just depending on which ones that I actually take, because those are the only ones that are documented. Like all those results are real trades. They're not trades that are hypothetical. Like right here, this would be a hypothetical sell, right? If we're applying that strategy, but I didn't take this trade, so I'm not going to include that in the results. But yeah, let me go back to the questions over here. Sammy said, can you use the K2 strat for scalping? Yeah, you can use, I mean, they're used for all the K2 strategies and all of the indicators. They all work on literally every time frame. They work on all time frames and all assets. So you can see right here that we have entries on the 10-minute, sell entry right here. Go on the 1 hour. You know, same thing here. We have a sell entry right here, buy entries right here. It's the same exact thing. You go on the 4 hour, same thing. You know, if you want to trade it on cryptos like we were looking at earlier, trade on oil. It works on oil. It works on Bitcoin. Works on everything. But it just depends on how you want to use it. Because I mean, you're referring to the K2 strategy, but if you look on the website, there's like 5 or 6 strategies. So it just depends on which one you plan on applying. Because we do have the intraday strategy, so that's 1. Momentum strategy, that's 2. The scalping strategy, that's 3. The SR strategy, that's 4. And then the pivot strategy, that's 5. But they all work on every time frame. So you can just apply the same requirements, but on a different time frame. So it just depends on how you want to apply it. But I do recommend, if you want to scalp, then to use the K2 pivot strategy. So it'd be right here, the K2 pivots scalping strategy. And that's the one that most people are using currently. Let's see. All right, guys, so it looks like that's it for the questions. If you guys have anything else, feel free to put them in the chat right now. I'll sit around for a few minutes. If we don't get anything, then I'll probably sign off for a bit. I'm gonna go grab dinner, and then I'll be back for, I'm not gonna be on live, but I'll be on the Telegram, and I'll be looking for trades to enter off the next 4-hour candle close. But yeah, so I'll hang around for a little bit, guys. If you guys have any questions, feel free to put them in the Q&A. I mean, yeah, the Q&A if you're on Zoom, or the chat if you guys are on YouTube, and then we can go from there. But if you guys have any other questions while I'm offline, just go ahead and send me a message, like through email or through Telegram, and I can respond to you guys on there as well. Let's see. All right, guys, so it looks like that's it for questions. So if you guys have anything else, feel free to reach out on Telegram. I'll be available on there. Otherwise, you know, I'll be back on this. If you guys are new here, this is every Tuesday and Thursday at 4 p.m. And then I also have, you know, when I'm available, I do the weekly analysis on Sundays as well. So yeah, guys, just stay tuned. And if you guys are following me on YouTube, you guys should be able to get the notification when I go live. So yeah, guys, it was great. Thanks for showing up. It was good, like, going over all these pairs. I kind of saw some things that I didn't realize before as well. So this, you know, this went both ways for us. But yeah, so it looks like I'm just gonna look at the active trades. We currently still have odd CAD active right now. It's about at entry. So I do anticipate this to come down. We also have CHF JPY. It's still deep in profit. It's probably gonna keep dropping to full TP soon. And I think that's about it. I have these other marked up, but we're not in those right now. So I'll see if I'll take these during the next 4-hour candle close. If not, then I'll probably just give you guys an update and then see where we're going to go from there. Because I think there's news coming up tonight at, sorry, let's see. Yeah, 11 p.m. there's a medium news for GBP. So we might try to be careful around that time. But if not, you know, I'll just avoid the GBP pairs, and then we can probably take these other ones since they're unrelated. But yeah, guys, so go ahead and reach out to me on Telegram if you guys have any questions. Thanks for showing up, and then I'll catch you guys again later. But yeah, guys, thanks for showing up. I'll see you guys in a bit.